You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN, and become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday. Yeah, Friday. Everybody's working for the weekend, and by golly, here it is. And based on what Christmas falls this year, middle of the week, this could be for most of us an incredibly extended weekend. So, good for you. Markets will be closed, I believe, half day Tuesday, all day Wednesday. We'll, of course, be here Monday, and I think I'll be here Tuesday. Michael will be traveling, and then we'll be here Thursday and Friday. So for us, you know, when the markets are open, we're sort of obligated to be here. But anyway, certainly glad that you're right here, right now, whoever you are, wherever you are, being right here, right now at 12 noon every day since 2005 is the place to be. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right hand side, click the big microphone, follow the instructions, You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. Now, on the days that you're out of the office, away from the desktop, point any internet-connected browser to this address, cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, let us take a look at a chart of the S&P 500 Emini Futures. There's crude. We'll talk about that in a moment. There's soybeans. We may or may not talk about soybeans today. But let's go to the S&P and let's go to our de facto daily chart that we've been admiring so much of late. Now, that spot that we've been talking about, the market, it's getting closer. It's halfway there. It's getting closer. It's getting closer. Has it actually done it? Has a 14th century mathematical equation done its job? Has it fulfilled its numerical destiny? Oh my, has it ever? Look at that. From the swing low put in on October 3rd to the then current all-time historic high put in on December 2nd to the pullback low put in the following day on December the 3rd, we have not only made it to a 50% Fibonacci price extension, we've now spiked above it, and we now have to set our sights on the 62% Fibonacci extension, which sits up at 32.50. We'll call it, that's on the screen, 32.53. Our highest weekly trading zone for this week is 32.45/46. Which, if the bulls keep pushing, is it possible we could see it this week? We only have a few hours left in trading for the week. It would take a pretty strenuous push, but stranger things have happened. Now, if we look at our monthly trading zones for the S&P 500 Emini Futures, you can see that we've made it to the monthly trading zone at 3220/3225. I'm gonna have to double check. Looks like there's a little glitch in the data, so let's do that. Do this. Okay, that looks better. So the month began, obviously, December the 1st. Went from zone to zone to zone. We spiked this zone down at 30.96. Back up to the zone, consolidation, back up for consolidation, back down, back up, 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 and away. Just like Santa's sleigh. Now, I do believe we have one more monthly zone above this, and I'll pull that up while Michael's doing the recap, and I'll have that ready for you when I come back. Let's look at the 30-minute chart real quick. This is, again, our highest weekly trading zone. This is what the week looks like so far. This was last week's highest weekly trading zone at 20/21. And the market has done a fantastic job of just continuing higher. Let me give you the numbers from around the world. Start here in the US with the Dow. These are the cash markets. The Dow's currently up 111 points. NASDAQ is up 35. S&P 500 is up 17. And the Russell 2000 is up 6. In the commodity basket, crude oil down 91 cents, trading 60.27 last. That's a drop of about 1.5%. Gold down $2.90, trading 14.8150 last. In the Asian markets at the close, Nikkei posted a loss of 48 points. Shanghai dropped 12. Hang Seng gained 70. And in the European markets at the close, FTSE up 8.5, DAX up 106, the CAC up 49. Gives us a mixed day in Asia, green day in the UK, and it's a Big Green Radio Friday here in the US of A. Let's go to Michael and get a recap of everything that happened in the live training room this morning. When he's done, I'll be back. We'll take a look at the Concierge Trade Alerts from last night. We'll take a look at Logic 247, which has done a pretty fair job this week, considering we've had such quiet sideways markets. Just the sheer number of alerts, or lack of number of alerts this week, kind of paints the picture of just what a quiet sideways and tight range it has been. But we'll go over all of that. Michael, I've got your charts.
Okay.
Good morning to you.
Good morning. Oh, good afternoon, actually, for me.
Yeah, true story. I live on East Coast time, so afternoon.
Yeah.
Okay, let me hit mute and it's all yours.
Okay, I got it. All right. Good afternoon, everyone. Today is Friday, the 20th day of December, 2019. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that or any of these other things down here that say free trial, any of those things, it's going to bring you to this page, eminitrainingschool.com. You can go directly to eminitrainingschool.com if you want to, but you can also get to it through the homepage. Here, all we ask for is your name, your email, and your phone number. Click on Register Now. When you click Register Now, you will be sent a confirmation link. You must click on the confirmation link. If you don't click the confirmation link, we don't know that you took the free trial. Okay? So it's pretty important that you click that. Now, today, like Dwayne was saying, sideways markets, they didn't make it easy on us, especially when we stopped out on our first trade. We made 10 ticks in crude, 10 ticks in gold, and we lost 8 ticks on the ES. That put us at plus 100 on the day. So we're positive on the day. Yeah, positive on the day. Today, I mean, that was our last trade right at the end. So we're up. I mean, we're up $100 on the day. Took 115 minutes and 6 trades to get there. Okay, and on the month now we're at 947, and that's over 15 days. On the year we're at 34,782. That's over 232 days, averaging $149 per day. Okay, now go back over here. All right, on the gold, let's go through what happened on gold. On gold, right here, was our first trading opportunity this morning. And we picked up 6 ticks there. And then our second trading opportunity was right here, and we picked up 4 ticks there. That was right at the end of the session this morning. Okay, since then, this would have been going into the low of the day, so we wouldn't have been able to do anything with that. And it turned around, came up here, didn't really give us anything. So we have to just wait right now. We don't have anything yet. We have dynamic resistance printing. We have dynamic resistance printing right there. So I'm going to draw a trend line like that. Now, any entry would have to be below the MA1 because we have this dynamic resistance right here. All right, it's starting to set up a long trade, but it's not there yet. The euro in the pre-market had some movement, but it was just garbage from the open this morning. Just nothing whatsoever. Okay, there was just nothing there. During the break, still nothing. You know, I suppose you could have gone short right there, but that's pretty close to the low of the day. So there was just nothing on the euro today. Crude oil. Let's take a look at crude. Okay, on the crude, we'll go back, all the way back here. See, there was just nothing in here. Nothing. And then finally, we got something right here. We took a short right here, and we ended up with a break even on it. Then we had a big move down right here. I was hoping for the, for the second leg that looks just like the first leg over here, but it didn't give it to us. We had, well, we picked up 2 ticks right here. Okay, and then we picked up 8 ticks right here to give us 10. And I missed this one because I was putting stuff in my log. This would have given us the goal for the day here, but I missed that one. Then during the break, let's take a look. During the break, now you see this purple line right here? That is the level that I said it should get back to. Okay, that's 60.50 is the crude number for the week. All right, so keep that number in mind because it's going to be attracted to that number. Anyway, it got up here and the slingshot was not set up for a long trade right there. Pulled back down. I'd have to draw a trend line here to see it. It's pretty close, just eyeballing it. Yeah, it closed on the trend line. You could have gotten a long trade there. Would have been a break even. Then it spun around and gave us a shorting opportunity right there. Broke dynamic support right there. Gave us another shorting opportunity right there. And it is giving us another one right now. So crude was pretty good during the break. Crude was pretty good. Now the ES, Dwayne just went over how the ES has been working its way up, but we had one trade set up in here on the ES. It was a shorting opportunity and it stopped us out. It eventually went down and did what it should have done, but it stopped us out first. Then it turned around and let's see. There was nothing we could do in here because we had dynamic resistance and we weren't really trending very well. Then it started trending during the break. And I would say there was a long opportunity here, but it was pushing into the high of the day, so I don't think there was. So, the markets have just been a mess. I was happy to get the goal for the day after stopping out on that first ES trade. Hey, Merry Christmas, Brad. All right. So that was the morning session. So let's go back to the spreadsheet really quick. Okay. Today is the 20th day of December, 2019. We made 10 ticks in crude, 10 ticks in gold, and we lost 8 ticks on the ES. That put us at plus 100 on the morning session. Today it took 115 minutes and 6 trades to get to the goal for the day. At that point, we were up $100 a contract, and we took a total of 6 trades. So we're at 947 on the month. We're going to get that number up by the end of the year. We're going to get that number up. Okay. So on the year now, we're at 34,782. That's over 232 days, averaging $149 per day. 149 per day. Okay, let me bring this over to here. And bring this up. This is what I was looking for. Okay. If you have not taken a free trial with us, go to the home page at CFRN.net. In the right-hand column, click apply.cfrn.net right here. Once you do that, you'll be brought to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. Hit register now. Once you hit register now, you'll be sent a confirmation link. You must click on the confirmation link. Okay. Once you do that, we know you took the free trial, and we'll give you all the information that you need to get into the live training room. And next week, the live training room is going to be Monday, Thursday, Friday. All right, Tuesday and Wednesday. We're not going to be doing the room. And yeah, so that's the schedule for next week. Okay. And with that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Dwayne's not ready. He's still getting his coffee. Okay. Well, this huge leg down right here, I mean, that was after being in chop like this. Let me just show you something. This is something that that one of the partners asked about this morning. The chop bands. See, when the bands are when the red lines are inside the black lines, it's choppy. And when they break out of the black lines, then it's okay to trade. Okay. See, like here in the pre-market, red lines are inside the black lines, choppy. They break out, it's okay to trade. All right. Now, it doesn't say go long, go short, but it says it's okay to trade. But when they're inside, that's when the market's going to be really choppy on you. That was something that I hadn't looked at in a very long time. But one of the partners this morning was asking about it. And
I'm here, by the way.
Okay.
Just
all right.
I figured I missed my call.
Yeah, you did. But that's okay.
Sorry.
That's okay. I was just going over some of the
take
stuff
your time. Take your time.
that we went over this morning. Is it a good trend indicator? Well, it doesn't show you what the trend is. It just tells you when you don't have a trend, Brad. And I don't remember what I based it on when I wrote it. Off the top of my head. But it tells you when you don't have a trend, basically. When it's outside, when they're outside the lines, then it's okay to trade. That means you have some kind of a trend, either up or down. But when it's inside the lines, that means you don't have a trend and you should not trade. You should just put the mouse away for a little while. All right. And with that, Dwayne, you can take it now.
Alrighty. I was just taking a peek at the economic calendar for next week. And what I show, we don't have a lot. On Monday, high impact, we have core durable goods. That's high impact at 7:30 a.m. Eastern. And then at 10 a.m. Eastern, we have new home sales. And then Tuesday, it's a holiday pretty much around the world, with the exception, looks like, of maybe Japan. And it shows here early close for U.S. markets next Tuesday at 1 p.m. Eastern. And then we and everyone else, with the exception, it looks like, of Japan and Korea, major markets, will be closed the entire day Wednesday. Now, Thursday is a financial holiday in Australia, Canada, France, Hong Kong, all of the UK. Day. Yeah, boxing. So if you're going to be traveling to those areas, take your gloves, I guess. What does that even mean, Boxing Day?
You get gifts in boxes.
Seriously? Is that what that means?
I'm pretty sure that's what it means.
That's
a
pretty good guess. I didn't even think about that.
Yeah. When I lived in England, we got to celebrate Christmas and Boxing Day.
Oh, interesting. Well, here in the U.S., all of our boxes will be out in the dumpster by then, or the rubbish or the trash, depending upon what part of the country you live in. And I'm looking to see if there's any high-impact news events on Thursday. I don't spot any. On Friday, we've got crude oil inventories. Typically, we get crude oil on Wednesday. And
They're bumping that to Friday?
that's what it says on investing.com. Yeah, something like that. Typically would just be bumped to Thursday.
Yeah, usually be at 11 o'clock on Thursday.
I'm showing 10:30 crude oil inventories. Natural gas and gasoline as well, but those aren't high impact. So next week, folks, will probably be pretty quiet. There's an interesting thing to holidays, and next week in particular, because I think a lot of folks with, typical jobs are going to have the better part of the week off. And so holiday trade for me means two things. One, the major Wall Street players are typically off, and those who want to trade or learning how to trade, have thought about trading, they actually have some free time on their hands. So they come into the marketplace and try their hand at trading, which can create some erratic behavior. Now, we're always real upfront by telling you we don't know what's going to happen next, but we always have a pretty high probability idea of what is going to happen next. But that's based upon the typical market participants. So I've seen some bizarre things happen during extended holiday periods, because you have more retail traders in there, just trying to get their wings. I saw a cartoon yesterday. It was kind of cute. I think you've all heard the saying, when you hear a bell ring, an angel gets his wings. Now you can probably see that cartoon in your mind without actually seeing it. It's a diner somewhere. There's an angel standing at the counter. The guy rings the bell, and there's a big plate of wings. So, yeah.
Yeah.
All right, let me grab these charts.
Okay.
Recap of the recap.
Today it took all morning today. It took 115 minutes and 6 trades to get to the goal for the day. At that point, we're up $100 per contract.
That's a good bingo.
Yeah. And it was tough this morning. They didn't make it easy on me.
No, yeah. That's kind of the way it goes.
Mm-hmm.
Notice price, guys, how it ran up here, and when it got to last week's highest weekly trading zone, even though it is a zone from last week and not part of this week's, we still got consolidation, because it's still an important price, important area in the grand scheme. And in this highest weekly zone for this week, I said it before, I'll say it again, don't see us hitting that before the close today, but I've learned not to rule anything out. Embrace all the possibilities. In fact, we go up here, do this, do that. And I do believe all the zones that you'll see today on the charts, they've all been updated to this week's zones. So please feel free to jot them down, because even though we have an abbreviated week next week, when Globex opens Sunday night, and it's scheduled to, the zones from this week will be very important still. Sunday night, Monday, and partners will still get their fresh weekly zones Monday morning at 6:15 a.m. Eastern, as they have done for 10 years now. We just celebrated our 10-year anniversary of the weekly trading zones. This week, we started out back here. How about over here? The 15th. There's the 15th. So our first alert concierge for the week was here at 31.83. It was a very nice run, almost to the zone overhead. We consolidated at this zone. That was the initial target, and the trade 2 target would be the zone overhead. So from 83 up to 3,200. It's about a 17-point move in the S&P. Alexa, 17 times 50.
17 times 50 is 850.
Thank you. So it's $850. I had it right there. $850 per contract move. Now that's to the exit signal. Okay. I said the final trade 2 target would be this zone overhead. We didn't quite get there. But our indicators provide not only high probability, low risk entries, they also show you when it's a good time to not be in the market because there are no high probability opportunities. And on an extended move, and an extended move is simply a move in any market that is greater than what the typical average move is in that market. I make all of our traders do their own legwork to determine what the average swing is in the market that they trade, their favorite market. On the S&P, we gave that out years ago, hasn't changed. The average swing in the S&P is 3 to 5 points. So once a directional move goes beyond 5 points, now that opens the door to an extended move, and that's certainly what we got here. And on an extended move, this is how I use the step line. The step line, it's on the left side of blue and climbing, and you'll see it steps over, steps up, steps over, steps up, steps over, steps up. When an extended move starts to run out of steam, the chart is kind enough to show us that. Price starts to walk sideways, and this step line, it steps up, steps over, steps up, steps over, and instead of stepping up again, it steps over again and again. And on a long move, a long trade, what we're looking for is the first red candle that closes below that step line. So in this case, the exit signal would be 31.9850. Okay, 31.9850. That turned a 31.83 to 31.86. So that turned a 3-point move into an 18-point move by doing absolutely nothing except exercising patience and discipline. And those are 2 trading tools that you can't buy. Nobody sells them. You can't rent them, beg them, borrow, or steal them. You must develop those yourself. So you exercise patience and discipline until the chart says, get out. And so we get out. Which led us to the next day, 31.98. And important prices, important areas are almost always tested, even on that move here. We triggered once, we triggered twice, we triggered 3 times before it was up, and away. And then on the following, we triggered once, twice, 3 times, 4 times. And the following day, we triggered once, twice, 3 times, 4 times, 5 times. All of those tradable moves. And then yesterday, we had an alert to be long 32.07. So that triggered and put in a swing high at 32.1050, 3.5 points. Got back below the trigger. This was an important pullback because it touched not only the BBC, it touched the weekly trading zone, the WTZ. When price pulls back from above to a WTZ, we expect that to be good support. When price pulls down from above to the WTZ, we expect that to be good support, as well as the BBC, so that's good support times 2. We got a leg, we got a retracement. Again, when we pull back to the BBC from above, we expect it to hold. It holds more often than it doesn't. And that continued the move right up to last week's highest zone at 3220/21. So from 3207 to 3220, that would be 13 S&P points. So that was a $650 per contract move. On this move here, the exit signal would have been the first candle that closes below the step line. The reverse is true for a short trade, but on a long trade, first candle that closes below the step line. Okay, so let me pull up the results this week so far on Logic 247. And see, Valerie, did you send those over today? I don't know. I'll tell you this much. If not, we've only had 2 additional logic alerts since we did the recap yesterday. Oh, and speaking of the recap, this came up yesterday during a mentoring session that Michael and I had with one of our partners. And maybe Michael and I were talking before the session started. But the question was, well, do you guys, how can I look at a performance record? How do I know how your methodology, or whatever it is, has held up over time? And the simplest answer to that is found at youtube.com/CFRN. You'll find years of daily radio shows just like this one, both audio and video. And when I say years, well, we've been recording the show since we started in 2005. But in the beginning, it was simply audio. We later implemented video a few years down the road. And since then, we've been archiving everything over at youtube.com/CFRN. So you can just go to any daily radio show. You can fast forward up to the part where you see Michael doing the recap. And so that shows you everything that happened in the live training room that day, like you just saw on today's show. The good, the bad, the ugly. Okay? We don't hide anything. We don't sweep anything under the carpet. Very transparent in everything that we do. Because when Michael and I decided to do this, to do what we do, we had sort of a list of all the things that we didn't like about everything we'd experienced at the hands of every other room / guru / guy with crystal balls. And we said, we're gonna make this thing, we're gonna make it different. And being transparent was one of those things. So when Michael has a good day, a bad day, a tough day, whatever kind of day, a red day, we show it to you. Nothing to hide, nothing to be ashamed of. But again, that's every single trade. Now, Concierge Trade Alerts, we did a 3-year public beta before we launched those as an actual product. That's a pretty long beta test, but we wanted to get it right. I think we did, the best, at least to the best of our ability. And since we launched the product, it's been 6 years now, I think, 6 or 7, since we launched the Concierge Trade Alerts. Not a thing has changed. You can go back, though, and you can see what happened to every single Concierge Trade Alert every single day. Just like I'm about to show you here. Logic, same thing. Every alert is a matter of public record, and after the fact, once the move is finished, we make it public. Whether we got stopped out, got a base hit, or if it happened to go out of the park on its own accord, because we're not trying to hit home runs here. What we're trying to do is show you that it is possible to be consistently profitable in the markets. Now, being consistently profitable in the markets doesn't mean never getting stopped out, because that's just not going to happen. Not here, not anywhere else. Anyone that tells you that they have a methodology or a strategy and they never get stopped out, something's going on, and you really got to take a closer look. Either they're not using stops, or I guess they're just pulling your leg, because that's not how trading works. So this week, week 72, thumbs up means price got to the target. Z's means it never triggered. So there's the S&P and the Russell and the Dow and Crude and gold, S&P, Russell, gold, S&P. I changed my format the other night because I think some folks are still having a little difficulty understanding the shorthand, if you will. So when I say nothing's changed, I should clarify that by saying the format I use, I just wanted to make it more understandable for everyone. And the second I posted the first one in this format, I got some really good feedback in the discussion group in the Telegram channel. Everyone said they liked that very, very much. So let me explain to you how the new format works. This is the alert number. This was alert number 2,825. So for the last, at this point, on December 17th, in week 72, we had issued 2,825 alerts, just like this, every one of which has been publicly recapped, recorded, and posted on the internet for everyone to see. This was the alert number. This was the market. This is the Dow Emini Futures. The alert was to consider buying 28,300. The target 28,320. Next target 28,340. And then the area above where we definitely expect to find good resistance, because this is a long trade, because we were buying, is the weekly trading zone overhead, 28,450/455. There was gold. In this case, we were selling 1480. Target was 1478. Weekly trading zone below the trade 2 target, 76.77. And then I suggested if we were to slice through that zone, we still had 2 more targets below that zone, 75 and 69. So there's the NQ, ES, Crude, gold, NQ, ES, Russell, Crude, gold, ES, NQ. And those are the last 2 that I've put up. Both of those ran to their target and then some. The S&P is still working towards that weekly trading zone. But basically how this read, and this went out last night or yesterday afternoon. It went out at, now the time you see there is my time, Mountain Standard, because Telegram reads your computer's clock. So if you're on the East Coast, you'll see 1:48 p.m. in the afternoon. By 3211, target 3213, next target 3219, and then the final trade 2, if we continue to power higher, 3245/46. So both the S&P and the NQ And as you may have noticed, we still don't have any red X's for the week. So 0% is stopped out this week. That's not normal, okay? What we average is about 20% of all Logic 247 alerts do get stopped out. The average number of alerts per week are, I'm going to say somewhere around 50 to 60. This week, though, and I don't have a recap. I think Valerie must have had to run out or something, unless she sent it earlier and I missed it. Let's see. Yeah, she probably just didn't have a chance. Didn't have a chance yet today. Is Valerie around? Do you know?
Yeah,
I'm here. I'll send it to you. I put it into social media post and didn't copy it to you.
Oh, no
Coming your
worries.
way.
Yeah, no worries. We just walked through them, so really the only thing, what's the total number of alerts we had?
26.
Okay, so yeah, we're running about half this week. Half as many alerts as normal, and that has to do with simply the condition of the market. As I showed you, pretty much flat most of the week. And then we started to move yesterday, and we've continued that move into today. And the market still looks incredibly bullish. Looks like it wants to keep climbing. Now, because we're at all-time historic highs, we typically look left to see any potential obstacles that are in our path where the market may find resistance, where it will need to consolidate, possibly even reverse. But if we look left here, we won't see anything because the market has never traded 32, 28, 75 before. Never in the history of man. Okay? Doesn't mean we don't still have a method, a strategy, if you will, of knowing what the next high probability move is. We do. And where the market will eventually be forced to consolidate, make a decision. Does it continue even higher? Or will we get a return back to the zone below? Last night on the Concierge, let me pull those up. There we go. There's my recap. Thank you, Valerie. Appreciate that. So for Logic, now Logic are the alerts that are based on current price activity. We start Sunday night, 6 p.m. Eastern, and we keep at it until 5 p.m. Friday afternoon. This is around the clock. Now people have said, well, what am I supposed to do with an alert at 2 a.m. in the morning? Well, if you want to sleep, I suggest do nothing. You can turn the notifications on and off so your phone's not going ding, ding, ding all night long. But we have traders around the world, so for some people, when it's 2 a.m. for you, it very well may be 2 p.m. for them. Hence the around-the-clock service. 26 total alerts, 8 never triggered, 18 actionable, and 0 stopped out. But remember, 20% is the average. All right, so now, thank you for that, Valerie. And let me go to Concierge. If you guys want to grab a screenshot of last night's Concierge alerts, you can do that. As soon as I take out the extra S in Thursday. It was Thursday. There we go. Okay. So every one of our traders got these last night. Come on. At 4:43 p.m. my time, so 6:43 p.m. Eastern. Okay, grab your screenshot. Okay. All right. On the S&P, consider being long 32.15. Okay. Buy 32.15. And once it triggered, it took two 30-minute candles to get to the initial target overhead, which is the highest weekly trading zone from last week. The final trade to target is still overhead calling at 32.45/46. So from 32.15 to the current swing high at 28, that's 13 S&P points, $650 per contract traded so far. Now, since we triggered, I just explained to you what the exit signal looks like. Here's the step line. Steps up, steps over, steps up, steps over. It stepped over, it stepped up. What we're waiting for, we'll stay with this until it gets to this number, unless this happens first. We step over, and instead of stepping up, we step over again. And then we get a red candle that closes below that little black step line. The closing price of that 30-minute candle will become the official exit signal. Okay? So that's the S&P. Let's go to the Dow. Last night on the Dow, we said to consider being long 28,430. Now from 430 to the zone overhead, 450, that's 20 points. The Dow pays $5 per point. So to the zones, $100 per contract move, 28,430. Now, tip. Trail if possible. Okay, that's when previously in the logic alerts, I put that in, and this is a perfect place to explain it. You see how price, it ran up to the initial target, 450, closed just below it, and then the next candle, which is the 9 a.m. Eastern candle this morning, 30 minutes ahead of the Wall Street Open, took off like a rocket. So trail if possible. This was very, very possible. It gave us a swing high up at 526. So basically it's 100 points, just shy, at $500 per point. So we'll call it a $450 per contract move, and that's so far. Now, please keep in mind, I'm not just going over the alerts where we had positive results. Although I think we had mostly positive results on all of them. Good, bad, or ugly. We're going to show them to you, talk about them, explain them if there's anything to explain, and then we say next. Because getting stopped out is just part of trading. It's as much a part of trading. If you're an auto mechanic, you got to lift the hood to work on an engine. I mean, there's no escaping it. There's no getting around it. You got to lift the hood. That may not be a great analogy, but if you can't accept the fact that you will be stopped out, no matter what indicator, oscillator, algorithm, no matter how you trade the market, if you can't accept that you will get stopped out, you'll never become a consistently profitable trader, because you'll never just settle down, settle in, and start trading. Part of your brain will always be occupied with the hunt, the seeking, the searching. Let me try this. Well, that didn't work so good. Let me try this. Let me try that. Well, everything works some of the time. Nothing works all of the time, except the market. Market works all of the time, and the market is always right. So the closer you can mirror whatever the market's doing, even when it defies logic, even when the world is screaming, this can't go any higher. We know it can. So our methodology and our indicators, their job, no matter what market or time frame we apply them to, their job is to go in and find the underlying rhythm of that particular market in that particular time frame, and then highlight for us the highest probability, lowest risk entry available. Always doing what the market does, not what we think the market should do. So last night on the Russell, the alert was to consider getting long 1675. $16.75. So we trigger and consolidate and trigger and consolidate and trigger, and we make it up to 1679. So that's a 4-point gain at $50 per point. It's $200 per contract traded. Important prices, important areas are almost always tested. Price gets back below the trigger after a nice little run, back below the trigger, and we put in a swing high up at 79.70. So, Alexa, what's 470 divided by 2?
70 divided by 2 is equal to 35.
Well,
Dividing by 2
not
is
exactly what I
dividing the
asked,
number
but
in half.
I get it. Okay, thank you. It's $235.
Anytime. Enjoy the sunshine.
You too. She knows the sun's shining here. That's either really cool or really creepy. Depends on your take on these digital assistants. All right, so we did the S&P, we did the Dow, we did the Russell. Let's do the NQ. On the NQ, word was, consider being long, 86.87. And that happened right here. Now, we're not foolish enough to think that we have the only way to trade the markets. I do think we have one of the simplest ways. And I think the way we've put together our training environment, of course, any business owner is going to, think their pizza is the best, or their car washes are the best, or their men's clothing is the best, whatever the case. That aside, I think the way we approach teaching you how to do what we do, I think it's very robust. It covers all the bases, from the live training room, where Michael, step by step by step, every day teaches you the core methodology, and he does it across 4 or 5 different markets at the same time. Now, especially to a new trader, like, how in the world could I possibly, watch and trade 4 or 5 markets at a time? Well, we're not asking you to. What Michael's showing you is that our method, our strategy, and our indicators, it's fluid across all markets. Doesn't matter. S&P, gold, crude. We don't trade pork bellies in the live training room, but we would, if we did, we would trade them exactly the same way. We would not
if there was any volatility.
Yeah, if there was any volatility, we would. Absolutely. So the NQ said, consider being long, 86.87. And we made it up to the zone overhead. And that zone is actually 8708/09. So from, let's see, 87, Alexa, 708 minus 687.
708 minus 687 is 21.
Alexa, 21 times 20.
21 times 20 is 420.
Okay, so $420 per contract move. We spiked the zone. We actually put in a swing high up at 24. So that's an additional 14 points the market made available at $20 a point. So this number could be another $280 higher. Getting out at swing highs, pretty difficult because we never know it's a swing high or swing low until after the fact. Now, I did say important prices, important areas are almost always tested. On the pullback, swing low was 86.86 and a quarter. The trigger, 86.87. So if price pulls back to 86.86 and a quarter, then that means yes, there was a second trigger, and that second trigger took us right back up to the same spot, the weekly trading zone overhead, which, by the way, unlike the S&P, for the NQ, this is the highest weekly trading zone. The Dow, I think, still has 28.4. Yeah, the Dow still has one zone left overhead at 28,820. So you might jot that number down. It could be important to you Sunday night on the Globex Open and into next week if you don't have access to the fresh zones when they come out. The Russell has one more zone overhead at 1712/13, and the NQ, we are at the highest weekly zone. So now we go to crude. Okay, crude danced to the beat of a little different drummer boy today. It went from the weekly trading zone at 6120/25 down to the weekly trading zone at 6045/50. Our alert on crude said to consider being short 6090. So that's right here. Okay, on the first move down, we made it to 6081. That's $90 per contract traded. Price then pulled back to the BBC, and when price pulls up to the BBC, we expect it to be good resistance until it isn't. Now, we did spike it this morning at 9 a.m. Eastern when the indices got their jolt. Was there some news that came out at 9 this morning, Michael, that you know of?
Not at 9.
Yeah, that's not typically a time for economic reports.
Right. Yeah, no, not at 9. There was something. Hang on, let me go look.
Okay.
Yeah.
So as you can see, the crude, kind of went along with the indices for a minute and spiked up.
Yeah.
But it never broke contact with the BBC. So when I say it held, it held. Both of these candles are touching it. So we come back down through the trigger for a second time, and the price was, consider selling 6090.
No, at 9 a.m. CB leading index came in, but that was Canadian. The pound, the Parliament Brexit vote came in at 9:30. That was a pass.
Mm-hmm.
And we had our news was at 10 o'clock.
I wonder if there's maybe a Maybe somebody tweeted something. Or...
Yeah, probably. It's a Trump tweet.
So 60.90 down to the zone below. That's 40 points, 40 ticks, $10 a tick. So that's a $400 per contract move. And again, this is the type of move, you're an extended move, you've got the wind at your back, momentum, you might hear it called. It took price down all the way to a low of 60.02. So basically that was a 90-cent move. It was an 88-cent move, which is $880 per contract traded. Getting out at swing lows and swing highs basically is luck, because we never know it's going to be such until after the fact. Has there been an exit signal? Great question. This could be it right here. This is a short trade, so the step line, steps over, steps down, steps over, steps down, steps over, steps down. Now you'll notice the size of these steps. The size of the steps are greatly reduced. It stepped over, stepped down, stepped over. If it steps up right here, that means we're going to have a green candle closing, and we won't know the answer for another 18 minutes. These are 30-minute candles, so we're 12 minutes into the life of this candle. If this candle closes green, that will be the official exit signal, which means it's not going to be a $400 move. It's not going to be an $880 move. If you are trading this and awaiting the exit signal, and with 18 minutes to go, there's no promise or guarantee that this candle is going to close green. A lot can happen in 18 minutes. And with the downward pressure on the crude market, now of course you can exit anytime that you think is appropriate. My best advice is to wait for the chart to tell you, because the chart somehow always seems to know. So that's what happened to the crude. The next zone below is down at 59.80/85. Is it possible crude pulls back up to the weekly trading zone at some point in this session and meets up with the BBC? That's very possible. And would that create a sterling opportunity for another short trade back down to challenge the swing low and possibly the zone below? Absolutely. But we have to be patient. There's patience and discipline again, the two things you can't buy. These are talents, qualities, skills, tools that you have to develop yourself. Okay? And gold. Gold's been caught between these two weekly zones. We got a zone at 76/77. We got a zone at 84/85. And since, going all the way back to last Friday. So gold has spent this entire week. Sunday night was December 15th. Monday the 16th. We've gone from zone, down to the zone, back up to the zone, and it looks like we're trying to go back down to the zone below. In fact, radio freebie on this Friday, 1479, 1477. It's a $200 per contract move if that's how it unfolds. Always use a hard stop when trading. And until you've proven yourself consistently profitable in the simulator, resist the urge, the compulsion to throw real money at the market, because whatever's wrong, whether it's the strategy, the indicators, or you, throwing real money at the market won't fix that problem. It only makes it worse, because now you've got the added weight of, not only do I know what I'm doing, I'm losing money doing it. So don't do that. It's that simple. Okay? Now, you'll have people out there tell you, oh, trading in sim, trading in demo, don't even waste your time with that. Why? Why? It's the same chart. It's the same prices. It's the same movement. It's identical. The only difference in this, which is a live account, and a demo account, is when I put on an order in this account, I'm either going to make a profit or incur a loss with real money. In a demo account, it's not real money, but you better treat it like it's real money. Too often, I see people get very clever in their demo accounts, swinging for the fences, and the answer is, well, yeah, it doesn't matter because it's not real money. Oh, but it does matter, because what you do in that demo account, you're ingraining habits in yourself that are certainly going to follow you into the live market. So in that demo account, you want to be on your very best behavior. You want to do everything as if it were live money, because that's what you're going to take with you into the live account once you prove yourself consistently profitable. So a person says, how do I know when I'm quote unquote consistently profitable? Because I made money Monday, then I lost a little bit Tuesday, and then I broke even Wednesday. All right, here's our definition. Okay, our definition of consistently profitable is 10 consecutive days in a row where you reach your goal in 10 trades or less. Now, 10 trades sounds like a lot of trades. Let's say your goal is 2 points on the S&P. That's what we teach. We teach $100 per contract as a daily goal in whatever market you're trading. That's 8 ticks in the S&P at $12.50 a tick. In crude, $10 a tick, 10 ticks, same for gold. The Dow would be 20, $5 a point. So our goal is to teach you to reach that goal, your goal, consistently, 10 days in a row, 10 trades or less. Yeah, but if I have to use 10 trades to reach that goal, I'm certainly not making any money. Well, you got to do the math. Now, with your, all brokers are different. They have different commission prices. I talked earlier in the week, I don't even want to talk about it again. If you missed the talk earlier this week about what can happen with some of the big box shops where you don't really have a broker watching over your shoulder and helping you, I think that was Tuesday's show. You should probably listen to that. If you're looking for a broker, the broker we recommend is Daniels Trading. In particular, we recommend Burton Schlichter, not because we get a finder's fee, not because we get a split of the commissions if you start trading with them. We use them ourselves, and we recommend them because we think they're the best. Bert takes on a personal relationship with each one of his clients, to whatever degree you want to have a personal relationship. Some people are, they're not looking for that. But I think most people are. They've just never experienced it before. Well, Bert's a broker who not only understands the methodology that we use, he uses it, even teaches a class on it every Thursday. He slows everything down and really explains it. So try calling a broker at one of the big box shops and talking to them about whatever methodology you're using to trade the market. And they'll just tell you real quick, they don't do that. Well, Daniels does. So at 580 a round turn on the S&P, last time I checked, 580 round turn, if you put on 10 trades over the course of a day, it's $58, all right? If you're trading one contract, is what you should be trading when you start. 10 trades, 580 a round turn, it's $58. That leaves you with 42. Hey, wait a minute, the broker made more money than I did. Okay. Hopefully it won't take you 10 trades every day to reach your goal. But when it does, guess what? You're profitable. You're still profitable. In fact, if it takes, we have what's called the 24/20 blueprint. It's designed to take a trader from 1 to 20 contracts over a period of 24 months in a very conservative, aggressive risk management style. On the days that you reach your goal in 1 trade or 2 trades or 3 trades, however many it takes, you've been allotted 10. If it took you 10 trades every day for the whole 2 years, you would still graduate, to give it a term, you'd still graduate as a 20 contract trader in 24 months. Now, that's obviously in a perfect world. That's a world where nobody ever gets sick or has a rough day or has to go on vacation or any of those types of things. So, I don't know about you, but that's not the world in which I live. The world I live in, stuff happens. So, the earliest possible time that you could reach that goal following the blueprint would be 24 months. Chances are it's going to take longer because you're going to hit rough patches. You're going to have days where you don't reach your goal. Now, when you have 2 of those days back to back where you don't reach your goal, the blueprint puts you back into SIM, and that's not a walk of shame. It's a wise business decision. Now that you're back to SIM, you book a mentoring session with Michael or I. We spend 45 minutes together, and we take a look at the trades you took that led you to having these 2 back-to-back days where you didn't reach your goal. We're going to sort through it, try to figure out what happened. Was it you? Was it something you didn't understand about the methodology or the strategy? Was it the condition of the markets, not conducive to trading? We're going to help you figure that out. Then we want you to spend a couple days more in SIM so that you get your confidence back, because at that point you're probably a little bit rattled. Then you go back live right where you left off. If you're at 3 contracts when you hit your rough patch, after we troubleshoot, you get your confidence back, you go live again right at the same spot. 3, 5, 10, whatever the case might be. Now, not everybody has a goal of ultimately trading 20 contracts. In fact, for a lot of people, by the time they earn the right to trade 5, because when you start with 1, you do your 10 days, you qualify to go live, you go live with 1 contract. We want you to increase your account balance by $2,000 before you add a second contract. In doing so, that second contract that you add is being added with profit you earned in the market. That's a big deal. It's not coming from savings, not coming from a loan. You're building the business with profit you already earned. And the same is true of the 3rd contract, the 4th, and the 5th. You only add additional contracts with profit you earned in the market. So honestly, if you never develop a skill set that allows you to make more than 2 points a day, that's okay. Because over time, you can make whatever your monetary goal is, you can earn your way to that position, one careful step at a time. So if one contract and 2 points gets you $100 a day, well then by the time you've earned the right to trade 5 contracts, that's $500 a day. $500 a day is $2,500 a week. So over the course of a month, that's 10 grand. Over the course of a year, it's 120 grand. That's a pretty decent income. Some people, especially those who have a retirement or pension or some other source of income, adding $120,000 a year to your income, just taking a couple points a day out of the market, sometimes that's enough. And remember, that's just with 5 contracts. If you earn your way to 10 contracts, well then that number doubles. 10 contracts a day, 2 points in the S&P, that's $1,000 a day. It's $250,000 a year. That's not a bad living. If that won't pay your bills, you need to seek out a debt counselor, because you've probably created some debt for yourself that is making life very uncomfortable. And when you have to earn money to just pay somebody, you don't get to spend it, you don't get to enjoy it, you just got to earn it to fork it over. That kind of takes the fun out of it, right? So if by chance you've gotten yourself into such a situation or circumstance, let that be your New Year's resolution. I'm going to go sit with someone. They may be younger than me. The stuff they're teaching me may not be from life experience, may be out of a textbook. But you know what? I'm okay with that. It doesn't matter. Point is they're going to give you some solid foundational principles to get yourself out of the situation, out of the predicament. Whatever steps that you agree on with this person, that may not be fun. It may not be pleasant. But the good news is now there's a light at the end of the tunnel. And it's not an oncoming train. You're actually working your way out of the situation, out of the circumstance that you got yourself in. Now, you're still not able to spend that money. You still got to fork it over. But knowing that there is that light at the end of the tunnel, that'll actually put a little pep in your step. Because the harder you work and the more that you make, the more consistent that you are, the closer you get to 0 day where you owe nobody nothing. Biblical to be out of debt. The debtor is slave to the lender. That's right out of the good book. And anyone who's in debt knows exactly what I'm talking about. That's how you feel, like a slave in bondage. They dictate how you live your life. Everyone needs to have a credit card for the purpose of traveling and other things in life, booking a hotel room. But if you're not paying off your balance at the end of every month, you're in the process of creating the very situation I just spoke of. There will come a day of reckoning when there's no more room on the card or cards. Those credit lines get cut off, and everybody all at once comes with their hand out. And they have a right to, because you entered into an agreement. If I spend this money, I'm going to pay it back. So I'm sure New Year's resolution includes losing weight, being taller, getting better looking, whatever. Let there be a financial entry in that list of things that you want to accomplish in the new year. And don't let it be like so many New Year's resolutions. You know, by day 3, day 4, you don't even know where the list is. Pin that thing up on the wall. Focus on it. Just knowing you have a plan in place. Just knowing that you're no longer digging yourself deeper, but that you're actually climbing your way out. Man, the flowers smell better. The sky seems to be a little bluer. And when somebody cuts you off in traffic, you just laugh. You might even say a little prayer for them because they're obviously stressed out and they're rushing to some place that, yeah, maybe they don't even want to have to go to, right? So cut them some slack. Just be glad there was no accident. Okay, anybody seen John? We've covered all. There's the S&P. Okay, we don't have an exit signal
No,
yet.
John.
Okay, all right. I'll jingle him in a moment, see if he's coming. Okay, the Dow looks like it might want to print. Oh, this is a new candle, so we got another 29 minutes to know if we're going to get an exit signal on the Dow. On the Russell, we got one right there. On the NQ, nope. Crude, nope. Okay, the candle we were talking about a moment ago, we talked about how it could close green above the step line. That would be the exit signal, but it didn't. Remember I said we've got downward pressure on the market, so don't be too quick to pull the trigger on this candle. So here we have another candle. Same story. If this one closes green above the step line, that's the exit. If we paint another red candle, then the market is still trying to get to the zone below. Price, even when it's going sideways, is always trying to go somewhere. And our weekly trading zones provide a framework. Our partners, passport holders, always know where price is trying to get to, and they always know what the next high probability move is in the market. Now, that doesn't mean they know the future. Doesn't mean they know what's going to happen next. But they know what the next high probability thing is. And those two things are as different as night and day. Most of the websites and methodologies and strategies out there promise you that they can tell you what's going to happen next, but we don't. We just tell you the truth, that we have a real good idea what it is. And I rest my case. Hold on for me 1 second, guys. I'm going to rattle John's cage, and I'll be right back. Michael, we were talking about the news earlier. Was there GDP numbers today? Now I'll scroll down here and take a check. I remember telling John we had GDP numbers coming. Let's see. Yeah, absolutely. Came in exactly as expected, 2.1. That news came out at 8:30, so that still doesn't really explain the 9 o'clock spike that we see across all the markets. Exception of the Russell. And gold didn't really react to it either. But Crude certainly did. Tried to run the other way, but BBC held it down and sent it lower. All right, let me find John here, get his mic open. Okay, I don't see him yet. Okay, guys, any questions? Anybody in the audience got any questions about anything? Put them in the chat box. If you're watching the show via the YouTube link live or the CFRN live page, I don't monitor those chat boxes, but if you use the other link that we provide, the one where you go to the home page, click the big microphone, follow the instructions, that one, then I am able to see your questions. You can put them right into the chat box. Okay. So let me bring back up, as we wait on John. Here's gold. From a monthly trading zone standpoint, we got into this little area, this zone 1480 to 1485. We were in it previously for one 4-hour candle, too. And then on December the 13th, the 10 a.m. candle, we got inside the zone. And here we are on December the 20th, 7 days later. And we're still churning sideways in this 5-point range. Let's see what the rest of them tell us. Okay, so the S&P is at the monthly trading zone. And let me pull up and see if, in fact, that is the highest. I think we got one more overhead. Okay, here we go. There's the Dow. There's Dow, the Russell, the NQ, Crude, bonds. Here's the ES. No, that is the highest monthly trading zone right there. So remember, we got a weekly zone up at 45.46, but from a monthly standpoint, and remember, the larger the time frame, the more important the information. So I'm not saying we can't go any higher in the month of December, but based on our work, this could be it. This area right here. Now on the, let's take a look at the Dow. The highest monthly zone for the Dow is 28,630. Highest monthly trading zone. Okay. And then for the Russell, the highest monthly zone is 1705. $17.05. Let me just copy that. There we go. And then for the NQ, highest monthly zone for the NQ, just overhead, 87.30. Okay. And crude oil. Highest monthly zone. Maybe we should look at the lowest, huh? No. We've got, where are we at right now? 60.25. Oh, I think I've got crude right here. These are the crude monthly zones. There's the highest monthly zone on crude. Despite today's pullback, that looks to be within striking distance. You know, we didn't look at bonds today, so let's go do that. John must be having some difficulty logging in. ZBH. There we go. Okay. So bonds, the highest monthly zone is up at 162.30. The lowest, okay, this is interesting. This is the lowest monthly zone for bonds. Is that, I'm sorry. It's 155. 10/15. There we go. So bonds are sitting on the lowest monthly trading zone. NQ's almost at the highest. S&P's at the highest. Bonds at the lowest. Here's John. All right, John, I don't see... Oh, there you go. Hey, John, welcome to the show.
Hi there. Sorry, I couldn't come on earlier.
Oh, no worries. Just noticing, bonds are at our lowest monthly trading zone.
Yeah, they just bounced a bit. They seem to have a bit of support around 155, 155 and a half. I mean, listen, when the bonds are going down, it's very, very good news for the economy. You know, I mean, it tells you the economy is getting stronger. And remember, these central banks have been at this expansion now for a long time. They've been pushing hard, been throwing a lot of money into the markets.
Well, the S&P, S&P is at the highest monthly zone. So S&P is at the highest, bonds are at the lowest. What do you make of that?
If the bonds go lower, I think the market goes higher.
Okay.
It's not a problem for the market until we get down to about 130 on the bonds, or lower than that. And there may be an interest rate spike, early in the first quarter. That could be bullish for gold. We're just probably go to the metals first, because the metals are a bit of a mixed bag today. The palladium, which got right up to almost 2,000, which remember was one of our targets, it just got a haircut. Boy, they knocked this thing down like 200 points almost in a couple of days.
Okay, now what are we looking at, John? Tell me.
Palladium, sorry.
Palladium, let me get that up. 1 second. All right, there's palladium on a daily chart. Wow.
Yeah, pretty dramatic. I still think that's probably some sort of a three-wave pullback. This is such a crazy market that it could just as easily rebound right back up into the end of the year. So I wouldn't. It's a very dangerous thing to be trading, frankly. But for those who are capable of it, you've got to just try and use the best signals you can to trade it. It has knocked the platinum down a little bit. If you want to pull up the platinum.
Absolutely.
Yeah. But not to any particularly large degree. The platinum was pulling ahead here the last couple of days. I honestly would put a buy stop, and I'm sure you'd probably agree with me, put a buy stop up there around about 940 on this thing. And I think with the idea that if it gets back up above today, it's probably going to go a lot higher. And this may be see the trend line? It's broken that trend line. This could be a test of the return line. So I'd watch it real carefully. That one, it's sort of, okay. Maybe not quite, but still.
Well, it's come back to touch it. I mean, if it bounces right here.
Yeah, no, for sure. That's why I think, I wouldn't necessarily be buying dips today, but I'd wait, if you start to see some strength come back into the platinum, I would be inclined to be trying to buy dips or trying to get positioned for what could be a really big move in 2020. The interesting thing is, if you could put the silver up, Dwayne, the silver is actually ahead today. It's pulling ahead. And I remember I mentioned the silver yesterday. The silver stocks were acting real well yesterday. I mean, if the silver runs away with, ahead of the gold here, I would consider that to be very positive. So we're right there on that downtrend line. I think we looked at it yesterday. It's probably already broken it. So as I said, look, there could be some volatility similar to the palladium with the gold and silver in the coming days. The next week or two could be a problem. We could get a possible fake out gold move down, possibly to a new monthly low or something, if the silver doesn't follow, or if it doesn't comply with that the same way. I'd be very bullish. So I think the silver is setting up for, remember when this silver took off the last time, I mean, it was pretty unstoppable. After every consolidation, look at the way it went. It streaked higher. I think we're going to see that come into play here in the next few months on the silver, and potentially with the gold. The gold is just actually, the gold's hanging in quite well. It's still hanging around that 1480 level. So again, I think you got to be, if you start to see this going above 1485, it just may go, you see, I mean, looking at the gold as it is, you can't rule out the possibility of one more test down to the 1440 area, but it may not be, how do you say, what's the word, equaled in the silver, so I mean, the silver's actually acting really well today. It's up 8 cents at the moment, and gold's off a little bit, but the platinum's down about 15 or something.
So here's the interesting thing on gold, John. Going all the way back to, where did I have that? Right here. Look at this. This is on our monthly trading zone chart for gold. We entered into this zone 80/85 on the 13th at 10 a.m.
Yeah.
7 days ago.
Yeah.
Look at that. We've got 7 days in a $5 range. That's a lot of consolidation.
Right. And how long have you been looking at the market doing this and then seeing a breakout and run up? It's done it a number of times. I was looking at it this morning, as a matter of fact. We're up 8 days now, and we've had a number of these days in the markets. The market runs up, it goes sideways, and then it continues higher. So, I think we're at a point where if the momentum gets manifested in gold, remanifested in gold to the upside, there may not be any stopping of it. It might, because I think if gold closes north of 1500 by the end of the year, we should be pretty thankful for that, and it probably means we're going up to about 1800. So I'm just watching the headline on CNN. Lawmaker goes from a Democrat to undying love for Trump. This guy who's switched sides. I was hoping all 30 of those Democrats would switch sides. They're kind of brainless for not doing that, frankly.
I haven't looked at the news this morning. Has there been? Are they still going to hold this thing up over the holidays?
If they, I actually think this is kind of a far out idea, that Nancy Pelosi, having kind of instead of censuring him, they actually managed to impeach him, right? But if they didn't send it to the Senate, they might be able to buy back some credibility from the voting public. So it may be an idea to say, well, we managed to impeach him, that's a stain on his life, but actually it could negate the impeachment if they don't send it to the Senate, according to a scholar. So it's going to be, in other words, they may have realized they've blown it. And
I agree with that.
Yeah.
I say,
it's like,
done.
Rather than go all the way and actually, they kind of made their point, if you like.
Mm-hmm. Exactly.
And, so
at what expense? At what expense of time and treasure to the American taxpayer?
Oh, it's painful. It's sickening, actually, the whole thing. It's just.
What if the last 3 years we had all been working together as a team to make America a better place instead of tearing it apart?
Yeah. Well, with everything they're doing right now, I was just thinking about this morning. If they can get some inflation into the system, because inflation will ultimately keep wages going higher. The whole problem with the last 20 years, and the reason why Trump's there effectively is because the disinflation's been killing everybody. You've had inflation, that almost everything from 2000 has gone up anywhere from 50% to fourfold, right? Fourfold, sometimes even tenfold, especially real estate and stuff. So the affordability of so many things has gone beyond the reach of the hardworking people, and that's wages have been, were actually going lower, relatively speaking, until recently. So things are only just beginning to catch up. And what was making me think of this morning is not so long ago. From about 6,000 or so on the composite, NASDAQ composite, I've had an 11,000 11,000. Actually, I think I said about 11,100, somewhere in that range would be my target for the composite.
Mm-hmm.
If we go parabolic, and we appear to be, we're almost closing in on 9,000 already. So we're up 50% from where I called this a while back.
Our highest zone for the month on the NQ is 87.30. And in answer to your earlier question,
well, that's the futures, but the actual composite itself is almost let's say 8-9 something right now.
Is it? Let me bring that up. You asked me earlier about the GDP before you came on.
Yeah.
That did come out today.
Oh, it did?
And yeah, and the numbers were, hang on, I got them right here. GDP. All right, quarter over quarter. 2.1% expected, and 2.1% is how it came in. And the last time it was 2.0.
That's probably why they didn't even bother announcing it. It was probably no news, but the personal income, I think, was up 0.3 today or something. So that was or 3% or something. That was a pretty good number.
Personal income, yeah, that came in better than expected. Came in
Right.
at the forecast was 0.3. It came in at 0.5.
Yeah, that's pretty good. So FedEx. Actually, I noticed yesterday FedEx gave us a buy in the afternoon, and it's higher today. Not by much, but it's. I think this is probably going to be a short next week. If the market turns down, definitely short FedEx further. Boeing had an unfortunate mishap last night or this morning. They launched a rocket to go the first rocket to go to the space station. Had some kind of an anomaly, and there's a kind of a.
Now, did they use
module.
Elon's facility to do that?
No, I don't know where it went from, but they've got a little capsule, a module floating around in space right now, and it's actually going to come back down to Earth on Sunday.
So what would I look at? Boeing space launch? Boeing Starliner fails key NASA mission as autonomous flight system malfunctions. That's it. Boeing spacecraft Starliner did not achieve its intended orbit after launching on Friday, making it impossible to complete its mission of docking with the International Space Station. No people are on board the capsule, as the flight was planned to be one of the final key tests before Starliner launches NASA astronauts. So, yeah, that is unfortunate. Now, what did that do to the stock?
Down a bit. Not a whole lot, but down a bit.
Yeah.
Yeah, I'd probably look again to not necessarily buying it today, but on any kind of a possible upturn. This stock seems to reverse off bad news. You see, I mean, look at the last time we had bad news and then it rallied. It's got a bit of work cut out for it now because it is kind of a negative. But come 2020, even though the 737 is not back in the air just yet, it's probably going to happen early in 2020, and I think that's going to be very positive when that happens. In fact, just the fact that they've said they're shutting down production. And that's probably that gap, I think, that caused that. But if sometimes they do that just because they're a little bit over producing or something, just to clear inventory. And remember, the demand for these planes is just off the charts, because if you order one today, you can't get one for 10 years or something. So the underlying scenario is very, very bullish. And
with that much pent-up demand, why isn't there more competition in the space?
Well, there is, but I mean, everybody's kind of maxed out, and the problem is, you got Boeing and Airbus are doing obviously the heavy lifting, but the Russians have got a kind of a copycat deal, and the Chinese have got a similar kind of a copycat deal right now. So I don't think that they're probably not going to be major competition for a while, but like everything, I don't think there's any issue with the aircraft industry, because the next generation of planes are not very far away, and that's going to make a lot of current inventory obsolete, and a lot of old. I mean, people just aren't flying old planes anymore because they're almost uneconomic to fly, you know.
Right, right.
So there's and look, the 787 is a fantastic airliner.
What happens to a retired airliner?
They're right outside your backyard in Arizona or somewhere like that. I think there's a whole desert full of them.
Just like an automobile junkyard.
Yeah, same thing. I forget where it is, but it's either in Nevada or Arizona. There's a huge airline graveyard.
And when they retire a plane that is, still functioning, but perhaps it's no longer economical or safe to put, paying passengers on, can individuals buy those planes?
Yeah, they can. Some people do. Why don't you Google up airline graveyard and see what comes up? Or airplane graveyard, rather.
Airplane.
You got an extra L in there.
Oh, do I? Okay. I'll straighten it. Yeah, I do. Okay.
There it is.
Brought it up anyway. The world's largest airplane graveyard. Well, show this one. I didn't want to watch a video. I wanted to just... That's a video too. Airplane Boneyard, Tucson, Arizona. I guess this is open to the public. It's a historic landmark. Now, let's see if we can find something better than that. List and map of airplane boneyards in the United States.
Wow, look at that image over on the right. Look at that, Dwayne.
This one.
Yeah, check that.
Let's see which one that one is. Is that picture clickable? Yeah. Good Lord, look at that. Fighter boneyard at Walnut Ridge, Arkansas, post-World War II. United States manufactured about 294,000 aircraft for the World War II effort. Once peace was assured, the U.S. military had a huge surplus. By the summer of 1945, aircraft boneyards were in operation to deal with nearly 120,000 surplus aircraft.
That's pretty amazing. They used to make 10,000 planes a month, something like that. So.
Commercial airliner boneyards and storage facilities. To protect airliners during their storage from wind and sun damage, engines and windows are tightly covered with white reflective material. Even the Boeing 747, the queen of the skies, sometimes meets the boneyard, as are the last of the United Airlines 747 fleet being ferried to SCLA in Victorville in 2017. This website includes coverage of several major storage, maintenance, and disposal facilities for commercial airliners. So this was one in Arizona right here.
Yeah.
Penal Air Park. And so then what? Do they just sit there? Do they scavenge them for parts?
Some of that goes on, I think. Looks like we're turning down a bit here, Dwayne.
On the S&P?
On the market. Yeah.
Well, okay, the NQ is currently at a weekly trading zone. So the S&P, we got above last week's highest weekly zone. Our alert last night was to be long 32.15. We made it up to 32.28. So now a pullback to this 2021, that would be ideal for another opportunity to either go long later in today's session or on the Globex Open Sunday night.
Yeah.
Pullback to there should give us another leg that at least attempts to challenge this high But again, we have one more zone for this week up at 45.46, and it's possible we see that Sunday night if we get no negative news over the weekend.
Right. It certainly is a very strong, super strong, continuing super strong. The way just every dip gets turned, except for right now, turns into another buying, another pretty big up leg.
Well, this is actually good. I mean, like yesterday, when we came off of this alert to be long at 32.07, we made a nice run up to 32.13, and then we pulled back to the BBC, consolidated, rested a little bit, and then bang, another leg. So pull back here, same thing. We consolidate a little bit, store up some energy, and then boom, off we go to the races again.
If you could put up Microsoft.
Okay. I'd much rather be a buyer here than here. So let me pull up MSFT.
Remember yesterday I said when it was just starting to lift off the lows, I said I had to buy early in the morning on Microsoft. Took a while to get going, but it see how it gapped up today, and I said it probably was going to hit a new high.
Sure did.
That's the developing doji. And look, there's a lot of conflicting. One of the things that usually makes a top is people get carried away with upside targets, and you start seeing things like the Bank of America coming out with that 3333 target on the S&P, something we talked about probably 6 months or a year ago. And when that happens, there's always a risk that we're not going to get there. So there's a lot of conflicting things that could torpedo the market anytime between now and the next quarter. And I thought about this when I saw Microsoft this morning actually spike higher and sell off right from the high. That's kind of what happened in 2000. I never forget this because you remember with Larry King, Bill Gates was Larry King's first interview of the new millennium. And that was the night that Microsoft stock topped out. And that was basically the beginning of the end of the 1990s boom, of the tech boom. It was the beginning of the dot-com crash, actually.
Right.
And so, since Microsoft is so strong right now, if we did get a streak into the new year and early in January, we get something similar, that is something to keep in the back of your mind,
How familiar are you
in other
with,
words, what I'm really saying there is, Microsoft was obviously the big leader back then, and it's still a pretty big leader today. It was the king of the boom in a lot of ways, and it was the first to top out. Microsoft and Amazon, I think, were the first stocks to top out in 2000, and everything else sort of followed, over the next year or so. But look at that chart; it doesn't look that awesome. I mean, it really looks like it's going to go parabolic. That chart, it's in the process of going parabolic right now. So I mean, this market is so enormous that is a very good chance there'll be some kind of a spike, some sort of a really big blow off kind of event that will maybe it's the day that if they do have a Senate trial, maybe it's the day Trump gets exonerated or something. It's going to be something big. Maybe it's the day they announce a deal with the UK. Maybe the UK leaving Europe is going to be very bullish. Who knows? But something upcoming is likely to create a kind of a blow-off scenario for this market.
What you said earlier about the impeachment business. If the Democratic Party, if they stop it right here, if they don't send it to the Senate, because they know what's going to happen if they send it to the Senate, it's going to get quashed. So if they refuse to hand it off, in their own minds, they can see themselves as, we won. We impeached the president.
Right.
Well, not exactly, but they'll put a W in their column, for a win, and you're right, the president will carry the stain of being impeached by the House. I just can't wait to hear the wording that accompanies them making it public that they've decided that, they've done their job and they've made it known.
They made their point.
They made their point.
Yeah.
Wow. What a waste. How familiar are you with leaps? Are you familiar with them at all?
No, I'm not really a leap guy.
Okay. Because I think, I'm of the mind that this market is due for a pullback, a substantial pullback. Not because I think the sky's falling or the end is near. I just understand that's how markets work. You get a leg and then you get a retracement. You get a leg and you get a retracement. You get a leg and when a leg goes, it's only going to go so far and you're going to get a retracement. I'm just curious how cheap a leap, to to lower prices. I was talking with Dr. Tom yesterday after the show, and see, that's a daily chart that looks pretty parabolic right there, doesn't it? A pullback down to this 3160 area, that's 60 points below us. I think that's pretty doable. In fact, I would see a trigger. I think a nice trade, however you did it, if you did it with options or, again, I don't know much about leaps, but 3,200 to 3,160. That's 40 S&P points. It's $2,000 with one contract. With 100 contracts, substantially more. I'm going to take a look at that because I wouldn't want to trigger short right now because we may still have an hour to go. I would want to trigger on the way down. I want the momentum of the market to take me in at about maybe even 31. Yeah, I might even go 3190 to 3160. That's still 30 points.
Yeah.
Those 30 points can make you a lot of money depending upon how you trade them. So I'm going to look into that. Okay. Anything else you want to look at?
No, listen, let's wrap it up, but thanks very much.
All right, well, we'll be here Monday.
Okay, bye.
All right, gentlemen. Anybody who has knowledge of leaps, you want to throw your hat in the ring and share your knowledge with us, I'm going to be studying up a little bit on that over the weekend. Currently, right here, right now, I'm looking for a pullback in the S&P to this 3220/21, last week's highest weekly trading zone, and then a continuation leg to the upside. Okay, so that was the Concierge Trade Alert last night on the S&P to be long 3215, on the NQ to be long 86.86, on gold. Maybe we didn't do gold. Let me pull that up. Did we or didn't we? Let me find it. On gold. Last night on gold, consider being short 1481. That's right here. Let me hit John's mic.
Okay, sorry. I think that.
There we go. Well, 1481. We walked up to it. Nope. Walked up to it again. Nope. And then we actually dropped to 79.5. So about a 1.5 point move. But again, if we go back to the monthly, to the 4-hour chart with the monthly zones, until we break out of this range that we've been in now for 7 days, and even once we break out to the upside, we've still got this swing high to contend with. And if we break down, we've got this swing low as an obstacle. And the Russell. So the Russell, we had a Nice trigger. Back below the trigger. Another nice run. And we're just now getting back below the trigger. Now, let me point out the difference in these two triggers, or these three. When we trigger here, we're above blue and climbing, okay? Then we get our pullback. We're below blue and climbing. But the point is we're still blue and climbing. This time, as we dip below the trigger, overhead we've got red and falling. And that represents potential resistance. So while and this is a pullback to the BBC, get below the trigger, got blue and climbing overhead, all for it. This one, be a little more careful, because you've got this clear and present obstacle right overhead. On the Dow just took off. And crude, this was a short trade. So what were we looking for? We were looking for a green candle to close above the step line. After the step line crossed over, we got it. 60.37. $60.37. Exit signal. Now, right here, we have a green candle closing above the step line, but it hasn't crossed over yet. Of course, in hindsight, wouldn't that have been a better exit? Of course, but that's in hindsight. This is the reality of it. 60.37. Alexa, 60.90 minus 60.37.
6,090 minus 6,037 is 53.
Okay, so from the entry to the exit signal, it's a $530 per contract move. You've earned the right to trade 10 contracts. It's a $5,000 move. Okay. The exit signal will never get you out at the swing low or the swing high. That's just not possible. But it does a fair job of getting you out at a better price than the trade to target, and certainly better than the initial target on an extended move. Let's go to our good word for the day. In real estate, we hear about location, location, location. The three most important things about real estate, they say, is location, location, location. In Genesis 2:15, we read about location. God took the man and put him in the Garden of Eden to work it. God created the Garden of Eden, placed Adam in it, and told him to work it. God went on to say, be fruitful and multiply, and fill the waters in the seas, and let birds multiply on the earth. In other words, he said, do a good job. Be successful. But notice there's a definite sequence to what we read in Genesis. First, God prepares a place for you. Second, he puts you in it. Third, he tells you to work it. Fourth, he says, I want you to succeed. This is called the law of location. You only flourish in the place where you belong, doing what God has called and equipped you to do. And you'll have to work at it. So don't expect it to be quick and easy. Now, this law of location is evident throughout the scriptures. After his life-changing encounter with God, we read that Jacob called the place Peniel, saying, this is Genesis 32:30, "It is because I saw God face to face, and yet my life was spared." That's when God changed his name from Jacob, which means deceiver, to Israel, which means a prince with God. God spoke to the prophet Elijah in the middle of a famine and said at once, "Go to Zarephath. I have directed a widow there to supply you with food." 1 Kings 17:9. Eden was the place of fruitfulness. Peniel was the place of radical change. Zarephath was the place of divine supply. Location, location, location. Now here's the question. Are you in the place God wants you to be? If you're not sure, talk to him today. Isaiah 48:17 says, "I am the Lord your God, who teaches you to profit, who leads you by the way you should go." So whatever it is you don't know, talk to him, because he has the answer. He knows it all. And I mean that with the utmost respect. That's our good word for the day and for the week. It is the weekend, so CFRN Charter dictates that you must spend quality time with your family. Of course, I'll see you in church on Sunday. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.